All right, welcome everybody. This is Eric here and Max with Investor Central Club and Stacks Software. We've got some earnings to go over for today. I mean, really just one. We got Cisco reporting after hours. But we did want to discuss a couple of things. I want to point out some of the awesome callouts that we've made over the course of this last week. Hopefully you guys have been listening, or if you're in our Discord, that you've got a chance to jump in on some of those. And then obviously we'll watch earnings for today, watch Cisco. We do also have applied materials coming up, but I wanted to share a few little details, a few little things that could probably help you guys make some educated positions. First off, I do want to share that we are going to be releasing WaveX pretty soon. Just hold on tight for us. It is a pretty awesome little tool. Let me share with you guys here. And the first one we're obviously going to show you guys here is Cisco. WaveX is a visual tool that takes the options flow and helps us gauge what the sentiment truly looks like. So for example, here we have WaveX from earlier today. And what you see here are three different lines and then the total aggregate premium on the bottom. So the blue line is the spot price, the actual price of Cisco as it's trading throughout the day from open till, in this situation, till about 12 or so. The red line is the total put premium, whether it's being bought or sold, it changes the line. And same with the green line is going to be your calls being bought or sold. So actually what this basically shows us is that puts are dominating the tape. And as you can see, the moment that you see puts break up above that, so you kind of have them close by to each other, and all of a sudden you see puts spike up while the calls drop. And all of a sudden you do see price drop from about 71 and 25 cents, and it's dropped from that point down to about $70.50. So 75-cent move in this situation with just what happened today, and this is what WaveX is allowing you to see. So when you see these big moves from price discrepancy, you can also see on the bottom you have a lot more aggregate premium favoring the red, which is the downside. On the other hand too, I do have a couple of positions that we are looking at. The big one that's been moving all week, I've been sharing this throughout the week, is ETHA. So if you take a look back, I usually link them to previous prints, but earlier in the week we saw a big flood of ETHA, which is the Ethereum ETF, and we saw a flood of calls come in. This one on the 11th was the one that really intrigued me. $37 calls for September, 900K, so right under $1 million being spent. And so with that being said, Ethereum has continued to level up and head up over. It's gone up over the course of the last 2 weeks or so. I think it's gone up like 40%. But that position, I actually ended up getting into the 37 calls for October here. That one today just saw about 100% return as of right now. So that's where we're at with it. And just so you guys also know, ETH continues to have some big money come in. So today we also saw it at about 11 o'clock. We saw January 16th, 2026, $40 strike. They spent 1.5 mil. Those ones are a little bit pricier, $6 per contract, but it does bring additional confluence and a little bit more confidence that we actually might see this continue to go further up. In addition, we did want to share what ETHA Ethereum looks like. We see premium. It's kind of zoomed out here, but in the back over here, in the beginning of the morning, we did see the price or the total premium of calls suddenly supersede our puts. But it wasn't until about 10 or so that we saw it really spike up. And we do see Ethereum continuing to head up higher at this point. We'll see how it continues to fare over the course of the next few days as well. The big one for Max. Max, you want to talk a little bit? You got two of them I want you to share. I want you to share AAL. I'll pull that up on your channel as well real quick. He pulled up this, was it yesterday, 7:22. I'm West Coast, by the way, Pacific time, 7:22 a.m. He did a quick little options flow. The bulls boarding early, and saw 1.17 million in bullish calls coming in, and he shared that for you guys here, so you guys can see 919 $14 calls for $623,000, and then another one for October for $500,000. And if you did get into these ones, 24 cents, maybe 25 cents. How did those end up doing?
So right now, I also hedged with some weeklies because I figured like, well, there might be a move this week. So I took some 815, 12 and a halves, and I got those at 0.05. And they're currently at 60.67. So they did like 3,000%, I think, so far. Um, and then the 919s are up 100% and the 1017s are up 70%
Yeah,
currently.
pretty awesome. I like that.
And mind you, there's been a lot more AAL calls coming in today. So it's something where I'm not really too worried about paying anything off or like selling anything off. Like I sold my initial, so the trade's free at this point. I'm just holding runners.
Hmm.
Um,
I like
because
it.
really if I make like 20 bucks on it and then I have like runners that I can like trim, then I'm comfortable with that because then it's like, hey, I made my initial investment back. So even if these runners go to zero on some crazy move, because when I'm holding runners, they're at like 150, 200%.
Yeah, I love those types of
And
plays where you end up getting, you get your 100%, take off at least half of it off the table, maybe keep a couple more for profits, and you let a
yeah,
few of them run, and sometimes you see some pretty ridiculous runners in this situation.
well, like I was pissed because I'll give you an example. Google, the Stacks AI Google call that seemed like it was a bust, that is up 370%. Like if because I like bought it and I sold it when I got to 150%, and then it just was at like 150% for weeks. Like I'm not even exaggerating. Like for weeks, it was just flirting between like 133% and 150%. And then when we had that crazy run with Google last week, the thing rocketed to 360. So like I think it was like a 320 entry. They're now worth like 11 bucks. Like you would have made like a grand by just holding a runner on a free trade if you bought three, right?
Yeah,
So and with these kind of plays like AAL, I like alerting these because I feel like it's anybody can get into it. Like
yeah,
it's $24 a contract. Even if you buy two of them, you sell one at 100% and then hold the other one as your like fun money runner because it's like you made 48 bucks and you have $48 more that you can compound. And if you see more American airline calls coming in, that just kind of like feeds into your bullish bias that you're going to have going into that trade.
yeah. I agree. And it's one of those situations where I'll point out, it's funny. Max and I have these conversations where, we're mad that we got out too early because we ended up with over 100% returns, but because it could have ran up to multiple X what we were looking at.
Yeah.
For example, one of some of my favorite plays are the ones that are shouted out on Stacks AI, and sometimes if you are watching the flow, you're watching what Stacks has to show, and you find another big money or another unusual print that happens to come after that Stacks AI print, and they're cheap enough for you to get into. Those are usually, when those do run, they do run pretty hard. But one of the things I will point out is there is sometimes a little bit of fatigue when it comes down to some of those where it runs up hard and you kind of see it pull back a little bit. Maybe it went up, 80, 90%, and it pulls back to about 30 or 40%. And obviously you start thinking, oh, I should have gotten out. I should have taken my gains. And there's absolutely nothing wrong with taking those profits.
Yeah.
But there are times, there's fatigue with watching what you had as profits run away from you. My suggestion is in a lot of these situations, don't take positions where you can only grab one contract. A lot of times that leads into more FOMO and leads into more fatigue. When you do see, I'd say when you see 70 to 100% returns on your position, at least take your initial investment off the table. You can let the rest of it run, or at least take some of your profits. Okay. But it's really a situation where what we like to do is we keep an eye on the flow. I will say if you're an AAL and you're looking at this, we do have some puts. We do have some big money puts also coming in today. It doesn't hurt to take your money off the table. I had some people asking me about this, and I definitely agree. It's like, yeah, first off, I like to filter for the buys, and you kind of get a better idea and better sentiment of what exactly is happening here. But these AAL ones down here are the ones that you guys got into, and that was just yesterday in the morning. And you can see over the course of a day, you have 70 to 100% returns already on those situations.
And one thing I want to point out is like when it comes to taking profit off the table, like never feel bad about it, because because one thing you need to understand too is the time aspect. And I think that's one thing people will forget about is like I've had times where I've panic sold contracts and then like a day later I'm like, why did I do that? Like these aren't due till November. Like what's wrong with me kind of thing, like I could have made money on another position and then just averaged down in this position to like ease the pain a little bit until whatever I'm playing into. So that's another thing you want to take into like consideration is like the time that you also have on the contracts that you're going to be holding. Because like I have runners where I'm like, it literally will go to 0%. And I was just at 150, and then I might be down 20%, but then like a month later, it's up 200%. That happened with Texas Instruments.
Yeah.
Like it didn't move. It didn't move for 2 weeks, and then it dropped to minus like 30%, and then it ran to like 250% as well. So it's really to Eric's point, it's a fatigue thing, but it's also a thing where like you have to sometimes just buy your time. And that's where you get into other swing positions so you can kind of like distract yourself. So like don't just buy one contract, but also don't make like 25% of your portfolio something you're not like having full conviction in either.
Yeah, agreed. I know a couple of you guys got questions. We're going to get to all of them. Don't worry. Just give me a moment to go through it. I also did want to bring up Max had a pretty awesome call out for Kava, which is the Mediterranean Chipotle. And actually something interesting too is that we've done our earnings analysis, we've done our earnings reports on those. So if you're in our Discord and in Stacks, you can see all of those. But Kava, well, first off, we had a few Chipotle call outs as well, and we saw Chipotle tank, and we look at Kava as like the Mediterranean Chipotle. Max did make this call out 2 days ago. Kava 74 puts. There was $450,000 taken out as premium for it for Friday. So it was just a couple days of it, and we saw Kava drop significantly over the course of their earnings call. And I do believe those ones I think saw at least 200 or 300% return, if I'm not mistaken, maybe even more.
If you sold them at open, you would have. It was $7.75. So you could have sold them at.
Yeah.
I think the peak you could have sold them at, from what I saw, and they were sitting there for a good 20 minutes, were like $7.85 a contract. But if it would have held that $64 level, it would have opened at like $10.38, I think.
So
it popped to 66, but I mean it's Chipotle, so it's like people hate it. But the big guys will always step in and buy it when it gets cheap. But yeah, and also another reason why I kind of like highlighted that is if you guys watched the CPI recap video I did, guess what increased significantly in price over the month? Eating out. And that's up 3%. So it means it's 3% more expensive now to go get a Kava bowl. And then the other thing that happened that was interesting is Kava took steak off the menu. So when it had its surge, it was because they put stake on, and now their stake is no longer available. So same store sales like basically tanked, but they still managed to open up 16 new stores. So I don't know. We'll see. But I think that was another factor is the CPI print that came in and kind of reading into like what was going up. And one of the big things are shelter and food. Shelter's up 3.2%, 3% more expensive, and then foods, eating out specifically, is up 3%.
Yeah, I saw uncooked beef also went up pretty significantly, so that might have led into
Oh yeah,
the cost factor for something like kava and why they took it off the menu.
it's up 1.5% for ground beef.
Yeah. Um, Again, I'll get to your guys' questions in just a moment. We do have about 12 minutes till we see the closing bell, and I wanted to just pull up Cisco since that's the big name that's coming up today after hours. We've got Cisco earnings coming in. And the one that kind of sticks out to me is this one. First off, I want to always point out when we're looking at the flow, what are we considering is we always want to consider the aggression and the urgency. All right. So when I see something like this, today's the 13th of August. We have buying 2 days out the $70 puts. They spent $1 million on this. Now, if you guys are familiar with options, you understand if this, number one, if this goes the other way, that $1 million very quickly is going to drop to like 100K, if anything. So if Cisco beats earnings and shoots up, then this 71, from 71, maybe even jumps up to like 74, 75. This $1 million that they have, simply because this $70 is no longer going to be in the money or not going to be anywhere close to being in the money, is going to suddenly drop significantly. So one of the big things to consider, nobody in this market is putting $1 million down on an options play thinking, oh yeah, tomorrow I'm just going to cash out with it down 90%. So that's something very significant to consider. And yes, while we do have some calls coming in, go double check that premium. 73,000, 168,000, 76,000. The puts here actually outweigh that, outweigh the calls quite a bit. And one thing we can also do here is I'm just going to go and filter for the range of the last 2 weeks just to see, because that's what's most significant. And you can see here, puts to call ratio over here is pretty even. Obviously the premiums for the calls are higher, but if you take a look, okay, that's all from last week, and we saw a little bit of a run up. So let's go ahead and just check for what came in this week, and all of a sudden you see the puts heavily outweigh the calls. $1.35 for those ones. There's also these ones for the $60 puts for September 19th. That's a little bit more of a gamble. They have some time, so if it does move down, you could still see that one pop quite a bit. And then these 67 ones for next Friday, I would say these three are decent earnings gambles. Remember, earnings is always a gamble. We have no idea what exactly is going to happen. Even if they report poor earnings and they have a double miss, price could still go up if they have good guidance. But from what we see here, there's actually a higher probability that we might actually see price go down after earnings, is at least what Stacks is telling us here.
I mean, it's not going to be aggressive. Like their revenue is only a 7% increase at 14 billion. EPS is going to come in at 0.98, only up 12%. And the options implied move is plus or minus 4%, which, mind you, by the way, that's 2 times its day average. So it's like it doesn't move more than 2% within a single day on a normal trading day without earnings. So it's not a ticker that's like crazy, that gets crazy movement. Because even if we look at like these puts that were bought today for $70, that strike, it was trading at 71.35. So they're expecting $1.35 move down for it to be in the money. Like, when you go and look at other competitors, because it's like they provide AI infrastructure. Guess who else provides AI infrastructure? Broadcom. Like, and look at how Broadcom moves, right? So when you put it up against its other partners, it seems tiny in a sense. So it's
Mhm.
like it's only up 21% year to date, and the base right now is $69.
Yeah.
So it's like it's only $2. It's only at $2.35. Well, it's at 7.58 at 3.44 on the latest put buy for
Yeah.
67 bucks.
Hmm.
Um, and then I think their big thing is tariffs.
Yeah.
And also, like, they're just stuck in the AI hype train. So they may end up being subject to, like, they have AI attached to them, but because they won't have a ton of AI results yet, people are going to be disappointed. So then the stock sells off and it does drop to that $67 level.
Yeah. I also will point out, so again, I'm showing you guys our WaveX tool. Keep in mind this will be released pretty soon, but we're just testing some things out, getting the last little fixes in before we release it to the public. But I will say today's drop kind of puts it a little bit more neutral in terms of, again, it's dropped. Let me double check today. Cisco is down. It's down 1.3% for today, right? So that might be a peek into what's being expected for the earnings. And another thing as well, let me pull up our charts here too. If I take a look over at TradingView here, you can see like it tapped up towards 72.59. It's back towards 70 again. It's ready, come all the way back down. It had a big pop on the 8th before open, and went up pretty hard that day, and it's already started to sell off from there. So PE ratio at a 28, that's fair. It's a strong company overall. It's one of the boring ones, like Max and I like to talk about. Is it's the kind of company that your grandparents invest in, but it's done pretty well over time, and it's something that's part of computer infrastructure that is necessary, but at the end of the day, is not going to be like a meta earnings mover unless there's some sort of huge surprise that we were not expecting. So keep that in mind in terms of this. But I will say I am leaning a little bit more bearish on it. But in terms of earnings, it's always a situation where you don't want to take too many contracts. You want to make sure that, like they say, size for zero in the case that it does go against you. I would definitely say picking out these three. The 67 put for next Friday is the gamble of anything. That's 92 cents each. The ones for this Friday, $70 puts, those could be pretty profitable, but $1.35, $135 for that, in terms of an earnings position, you got to be ready for that 135 bucks to disappear. So keep that in mind. All right. But we will keep an eye out for what happens during after hours. But if those are positions you guys want, let us know. If you are looking at Cisco, go ahead and comment in our description box or comment in our chat box so that we also know that you're in it. We'll be rooting you on. If you are here, I see 12 people watching. Comment stacks. If you're here because of Trader Link as well, I'd love for you to comment Trader Link. Let us know. For those of you that are new to us and unfamiliar, we did acquire TraderLink just last week. We're in the process of merging things, but welcome all the TraderLink traders. We are excited for our acquisition, our merger, to help both sides in terms of bringing better trading tools and better analysis for everybody. And if you do have questions, please don't hesitate. Let me know. We're happy to answer those for you here. We did have a question. Is there a way to teach us how to hedge like what you did? So, Max, you had the hedge in terms of your American Airlines positions. You wanna
Yeah.
discuss a little bit of what you did there?
Yeah, so basically it's a combination of options flow, news, and basic technical analysis. And when I mean basic technical analysis, it's like finding where did price kind of like plateau for a minute, which can kind of show you where people started to accumulate and buy, where and then also taking into account, like, to Eric's point, how he talks about urgency and size, like those are two big factors when it comes to options flow. Like I was thinking like, okay, this person is stacking calls for two different expiration dates, which means there's two different like thought processes in terms of when they think they could see a move by. So it's really like when you see the same strike but different expiration dates, that means that one, they think it can reach that level by the earlier strike, and then two, going into that next kind of long dated position, they're just delta hedging, which if you're not familiar with delta hedging, it's basically being able to own the stock, but without having to buy that amount of shares. So like in a lot of like, let's say you have $1,000 worth of contracts and they're $1 a piece, so you have 1,000 contracts. If those contracts go in the money, they'll move like $1 to $1. So you'd make $1 for every dollar that the stock moves, and if you have 1,000 contracts, you're making $1,000, right? So you get that return on investment, but without having to put up potentially $7 million. Instead, you only had to put up 70,000, right? So that's kind of where those kind of positions take for me, because again, those are things that one, they had a super low entry point, so that was attractive because if it did go negative, it was easy to average down into because again, you had time. And then two, it's just understanding like where's the potential catalyst, and then also watching for repeat flow near and or at the same strike price that you're buying into. Because if you look at the flow for AAL, it's mostly $13 calls and $14 calls, and then $12 puts. So that means the floor is probably $12, but there's still people betting on the upside for it to hit 14 by September 19th or October 17th.
Yeah.
So, because those 919s are up 100%. So, already. And I took 815s as a hedge just because I was like, okay, well, if it moves aggressively like this person think it is, and I see more flow for smaller bets coming in on the weeklies, then at that point it's just a hedge for me in the short term. Where it's like, okay, I'm expecting aggressive price action to the upside, and those went, you could have got them for $2 a contract if you bought them at open, and they're currently at like 0.68. So that's a 3,000% move in a day. So yeah, that's kind of how I treat hedging. Is it's understand, you have to, I think the big thing with hedging though, and Eric, you can tell me if I'm wrong, is like you need to have like a thesis though. Like you need to have a reason as to why you're in a trade, even if it's like, hey, I saw a whale get into it and I don't think they want to lose this capital. Like that could be the base of a thesis that can take you further into being like, okay, well, let me go Google what news is going on. Because that's what I do. Like when I post that stuff in my analysis, immediately after I go to Google and I go, okay, Circle News. And then I'm just looking for what recent news articles have broken in the last 12 hours on this stock. And then figuring out, okay, is this something that could be a catalyst that could move the stock one way or the other? So that's kind of how I'll treat hedging, is it's news and capital driven when it's all said and done.
Yeah. Thank you, Max. We did just have the closing bell. I'm going to keep CSCO on our screen for us to watch. We'll see what ends up happening. Let me know if you guys did end up taking any positions. It looks like some people in our Discord took some puts as well on CSCO. So we'll see how that turns out. I'll keep an eye out on Twitter to see what kind of news we get out first. But yeah, just like as Max was saying, you know, at the end of the day, don't go into things blindly. You know, I know for a lot of newer traders, that's kind of where things start. You follow what other people say, you follow and see what's being said on Reddit, on Twitter, in the Discords that you're a part of. But at the end of the day, the goal and the person that has more data and more reliable data is the one who, you know, ends up winning. And it's also important to make sure that you have some sort of risk strategy set up for yourself as well. So at the end of the day, for a lot of these positions, yeah, a part of your thesis can be, we saw Stacks AI shout it out. But then go ahead and try to do a little bit more research. Look at the charts. Ask us to look at the charts. That's always what we're here for. If you're in our Discord and our Stack software, you're in TraderLink, let us know. But take a look as to what the technical analysis happens to be. Take a look as to what the PE ratio is, what the future outlook of the company happens to be. How do they do on earnings? What are the previous earnings reports and how do they react to it? So, for example, in Cisco at this one, we already did our write-up with it, but Cisco is actually very close to where they were in the dot-com bubble in terms of all-time highs. So if you look all the way back here, this huge run-up during the dot-com bubble and that coming all the way back down, it took 20 years, 25 years for it to come back up over here. And we are, in this situation, if you ignore that little peak, we're basically at or near all-time highs. We continue to head up further and further. We're very close to the top of this channel, which has also proven to be an area where we start to, drop away from. In addition, if you take a look, I'll have to put it here so you can see, our stochastic, which are indicators, showing that it's actually a bit more overbought. It's actually on the high end of being purchased, and so there is more risk to the downside. The probability of it dropping is a bit higher than it going up higher. Same with on the daily, we also have very similar sentiment there. And so then you add on, okay, Stacks just showed that we do have big money getting into puts here. We do have a lot more of this downside risk to this company right now, especially, and you can see right now, I don't think earnings has actually come out just yet, but we're already
It's already dropping off.
Yeah, seeing it start to drop down. But I will point out, and Max and I are both very familiar with this, that first move is not always guaranteed to be the correct move. But we did see it kind of technically popped up a little bit. So again, we could see this head down further. We still got to wait for these earnings to fully report before we'll get an idea of what direction it's actually going to move. Up. There we go. There's the drop. 67.
Jesus.
66. Oh, coming back a little bit.
Oh my God, that was ugly.
It's also because I'm zoomed in a little bit. Let me see.
Oh no, I'm looking at it kind of far out, and it's bad. It's like Lululemon bad. Like this is Lululemon. Oh my God.
Okay, Cisco revenue 14.7 bill versus 14.62 bill estimate. So they beat. EPS 0.71. Oh, they missed their EPS by like 20 cents.
Yeah, the one thing I was gonna say is when I did research on Cisco, their big thing was they have delivered revenue surprises the last 2 quarters. So I was expecting a revenue surprise, but I figured EPS would kind of be their Achilles heel.
Yeah.
Because I feel like a lot of companies, and do you feel like this too with how much earnings we watch, but they either are EPS beaters or like revenue beaters. It's never consistently both. It's one or the other typically.
Yeah, and then you also have some of the big names that always tend to beat everything, like NVIDIA and things like that.
Well, we're talking. I'm talking about like the normal guys, like the Ciscos of the world, because those are the ones where they're very interesting because they have these aggressive drops, but then you'll watch dark pools and hedge funds come in and just buy it up like it was a Black Friday sale at a Costco. It's insane.
Yeah, big money. We like to use Stacks because big money is always going to have insights that you and I don't necessarily have access to. And they're not going to, I've always, a little history about Stacks and a little bit of history about Investor Central Club was, Chemo had the original setup for Investor Central Club where we do have options flow in there. Let me share that with you real quick. We do have options flow in the Discord, but it is what I would say considered a little bit more of a where is it right here? Okay, It's a little bit more of a like, it's very useful because you get these individual messages and prints to see what's going on. So for example, the thing that really separated his system from everything else was they would give you a score here in terms of the aggression or how unusual things actually were with the position that they're taking. With that, what I used to do and what I did when I first joined was I noticed that every once in a while we would get some of these scores where it would be above 100. And we also, every once in a while, would see premiums where they would spend over $1 million. And so I eventually requested that we created a big money channel. And a big money channel here actually picks out all of our really large premiums. So anything over $1 million gets thrown into this channel, so it's easier for us to see. Now, the only problem with this is that if you were to go filter through it, you got to use the search bar. And the search bar doesn't allow you to search, let's say, I want everything above 100 or everything above 1 million to 2 million. Doesn't give you those parameters to search ranges and things like that. And so that's where Stacks comes in. You know, over time, it took us a while. It took us, we had to find different developers. And finally, Chef, our MVP, is the one that helped us create this, where Stacks is now the system and what we put together in order to not only see things in a very beautiful visual manner, but we can actually go in here and filter for the things we want. So for example, now we want anything considered unusual. We have it highlighted not only in blue, but we can also go in and double check to see if they're being bought or sold. We also have our big money filter as well. And as a result, we can see anytime they spend over $1 million. And we can actually, technically, you can go in here and you can filter it to see what the biggest amount of premium was. So in this situation, back in January, they spent $275 million on SPX when it was right under $6,000. And look at where it's at today. These are still or they sold these puts. So they took all that premium in there. And they ended up, benefiting from that situation. They have these calls as well. And so these calls are probably looking really nice and pretty right now because they have till December here. So it's just a way for you to go through and filter through the information. And from there, we also have Stacks AI. Stacks AI, we did a lot of tweaking to making sure that it shouts out all the very unusual but also big money prints. And as a result, I've gone through every single month and done a back testing on this just to see where price ends up going. And it's been, if you go back, you can check out our YouTube. Make sure you go look at our videos. I just did a back testing for the last month of July. But, the hit rate and the return rate, average return rate on these is actually pretty impressive. 90% plus win rate, 240% average returns across 400 plus prints that we've seen in the course of 2 years. So just want to make sure you guys understand that. A little bit of history about Stacks and about ICC for you guys. Let me go through, I'm gonna go through some of these questions you guys have real quick, just so you guys see. On Cisco is down to almost 3%, but we'll see if we see additional moves. I'll bring this back up for you guys. Let's answer these questions you guys have. The first one that we had up here was, can you guys cover improving my entries after seeing prints or Stacks AI prints? First off is I would suggest that you never go in with a full position right away. So when I see a Stacks AI print, for me, for a lot of times I would just say 1,000, maybe 2,000 is usually what I would consider a full position for my positions. Okay, so depending on it, sometimes for a Stacks AI print, I'll start off with a $500 position. So if it's $1 for those contracts, I'll spend $500. I'll get 5 of those contracts, and I will be ready in the case that if it does drop about 30%, 40%, that's usually the line where I'm going to draw, that I'm actually going to go and consider getting into more. Now, what makes me decide if I'm going to get into more? I always pull up Stacks and I double check to see what the continued buying happens to be. Whether it is these situations where they have continued purchasing for the options itself. So for example, one of the good ones that we had recently that I shouted out was PCG. And PCG, back over here, we saw these unusual buys for these calls. Okay. Now the thing with this is that it just kept going up. So PCG from this $14 range has gone up to about 15.5 as of today. And so always double check to see, you know, for example, this one on the 4th, when they purchased another $1 million of those $17 calls, that gives me more confluence and confidence that, okay, number one, I should stay in this position and I should continue to be in it or even add into it. Now, in the case that the price had dropped and went against me, that's where I would have said, okay, they're still buying. I'm going to go average down, and then that way it's going to bring my cost basis down. And then you can consider here, they bought some puts over here. Why did I not get out? Well, look at the premium that they spent. They spent $50,000 on each of these. That's 200K total. But we've got all of these where they've, you know, this one by itself, 650K, supersedes that position already. So they're not getting into this so heavily that I can say that it's going to, you know, they're expecting a huge drop or they're expecting it to go in the other direction right away. So that's one of my big suggestions is make sure that you level yourself into these positions over time, because especially with Stacks AI, you know, we put our threshold at 15%, meaning that it's not considered a win unless it's made 15% on the return. And a lot of times if you are able to get into a position and average down, you'll see higher than that at the end of the day. So consider that as your you know, when you get into Stacks AI, especially as well, go ahead and discuss with people in our Discord, see if anybody's still in that position, and ask to see what the charts look like and all of that as well. Do you have a rule like if you're down 50%, you're going to exit next day at open, or how do you manage to buy and expect what you put in to go to zero? Generally, you obviously never want anything to go to zero. There are certain things such as earnings plays where you can expect that, hey, if this is wrong, I could see it draw down 99% the next day. There are situations where you got to look at your position, and if it is down 50, 60%, sometimes it is better just to, you know, take that premium and run. The rule of thumb is that any drawdown that you have, it takes a higher percentage for it to come back. So if you're down 50%, you need 100% the next day, or 100% over the next couple days for it to bring it back to even. So fighting that uphill battle is something you want to avoid, and, you know, more often than not, you want to, you know, get yourself out of that position and don't look back. That's the key. You don't want to go on tilt because you saw it come back and pop up higher. But I will also point out for some of these Stacks AI, that one of the dangerous things about Stacks AI is Max and I have definitely seen positions on Stacks AI be down 50, 60%, and all of a sudden the next day pop 150%, and all of a sudden be in the green, you know, 60, 70% in the other direction. So, you know, it's up to you and your risk management, but as you know, obviously, don't load the full boat right away. You know, you should never have your full portfolio in one position. You got to play the risk management thing and make sure as well that you are careful with, careful with your risk management. Don't get too greedy in a lot of these situations, because I know with Stacks as well, there are a lot of times where you see it continue to run, see it go up higher, but you will always make the best decision you can at the moment that the moment that you're making that decision. If I'm looking at 100% and I'm salivating at my return, it doesn't make sense to hold on to it and have my emotions played with, waiting it out for it to go further. Okay, you can use it as future learning for yourself to look at a position to say, hey, should I have held on longer? What did the chart look like? But if you're not willing to do all that additional analysis, we like to say if it's good enough to screenshot, good enough to share, it's good enough to take your profits. Okay. Based off of your experience with Stacks, what's the general rule of thumb you would say for a Stacks score? Now keep in mind, so in the Discord there is a scoring system. On Stacks we do not have a scoring system. Okay, Stacks, we did not want to have all those numbers cluttering the data. We do not need it. The main thing that you want to take a look at is the expected move. So the expected move, so for example, let me scroll down here for a good example. Okay, let me switch to buys. That makes it a little bit easier to explain. So I'm looking here at BMNR. Okay, I believe that's Tom Lee's fund. They bought some puts for it. It's trading at $61, and the strike for that put is 45. That's an expected 26% move to the downside. So first off, that's going to get marked as our unusual. We've got some other calculations there as well, but that's one of the first factors we consider is they're expecting a very large move to the downside. And if you understand how options work, at the end of the day, if it doesn't make a move toward that in the time that is allotted, this is going to, their $551,000 is going to go to zero. So it's very unusual for them to be taking this position. So that's one thing you always want to take a look at is how far of an expected move are they taking. And so, for example, if I click on unusual right here, this one, NVTS, they're expecting in the course of another month that this is going to move up 20%. Okay. And so what I would do here is I'd go double check that, and I would see, okay, well, that's only one position. They spent $114,000 on it. That's not exactly the biggest amount. A lot of these purchasing that came in right before they had their earnings, they've actually dropped since earnings. So that's something to think about here. Okay. Now, what I want to see here is, I'll use ETHA. Ethereum, as you guys have seen, has run up quite a bit. I want to see this. I want to see unusual. I want to see big money. I want to see continued call buying. Sure, a put here and there, that's fine. This one, $59,000. I pretty much would turn my nose up at that and say, okay, that's insignificant when they are purchasing 250K here, 230K here, 900K here. So understand it's all about the context. Make sure that you understand what exactly they're aiming for and what type of risk are they willing to take. These short term, that's very aggressive and very urgent. So they expect this to go up above 36 before Friday. Otherwise, their 50K here is gone. Okay. And again, 50K is kind of small, but here we got 1.5 mil by January. All right. So what are the positions that are taking? What are they expecting in terms of the move? Things like that. Thoughts on Carvana? I like puts for 116.26, but just saw calls come in at end of day. CVNA. I just peeked over at CSCO. CSCO's only down 3%, so not a huge thing. Okay. So what do I think about Carvana? Well, Carvana shot up like crazy. Okay, we also did, I do believe we have, Carvana had some calls come in for Stacks AI, but keep in mind this is at the end of May, so it's been some time. We saw this pop heavily after their earnings, and if you take a look at Carvana's chart, it just came right back down. Let me show you guys real quick. So Carvana, huge pop from earnings. It has basically come all the way right back down. Okay, so they're possibly playing the fact that, okay, I could, this could come back up a bit. It is, in this situation, there is a little bit of a trend line where it has technically broken and started to break above it. So maybe they're playing that breakout in terms of this, that there is still some upside to be had on Carvana here. But I would definitely say, what's the thing that sticks out to me on this Carvana trade is these three right here. Yeah, that's 1.3 mil, 2 mil, 700K. So that's what, $4 million spent right here, aiming for above 360, which is only $10 move up. They expect it to happen by next Friday. Okay, so they've got, in terms of trading days, they've got 7 days for this to move up. $10 for a big name like Carvana. Yeah, that's very possible. But overall, these unusual puts, things like that, especially after their earnings, it dropped quite heavily. So unless Carvana's got something up their sleeve to help push the stock price back up again, that was a fairly big overreaction to earnings popping it up, and it's really come back down to earth. PE ratio is at a 86 right now. So, yeah, they beat earnings, things like that, but it kind of came back down to earth pretty quick. Yeah. So yeah, use stacks to see what stands out. Like you said, the 811 Carvana puts 7.58 mil, and they're aiming for down below 300. Okay, so consider that. Now I always like to do too is make sure I filter for the buys, because sometimes selling can be hedging against positions. They could be selling naked calls or naked puts. They could be selling against their actual stock. They could be selling off the calls or the puts that they already had. So at the end of the day, it could be them getting out of a position. So, this unusual, definitely this unusual one is the one that kind of stands out a little bit more. Another thing you guys should be doing too is go and check. Go on, for me, it'd be checking Webull. I don't know if I have it. I don't have it pulled up right now. Checking Webull and double checking, is that 300 volume? Is it still open interest? Are they still potentially in that position? That also gives you an idea of whether or not this whale is still in that and holding on. So keep that in mind.
And one thing about volume versus open interest is if you ever see the volume significantly over the open interest, it is a fresh position. If the volume is near the open interest, then it could be just, I would look at previous prints to see where that other volume potentially came from. Was it from another whale? Was it retail? And the way you'll be able to tell is whale's going to buy like 2,000 to 5,000 contracts as a starter position. And then you might see that same person buy 15,000 contracts a day later. So again, if volume over, and that's where a lot of the unusual prints in stacks will be volume significantly over the open interest, by the way. And that's why it's unusual, because it shows that it's a fresh position for a whale, basically, that might be going against the chart or whatever the case might be.
Yeah. Very much agreed. Okay. Let's put this back on the... So final earnings numbers. It looks like they did have a double beat, but it's barely. They beat EPS by 0.01, so by a cent. 1.32% beat, and then their revenue beat by 0.39%, so 57 mil. Is the OI on stack showing the OI on that day, or OI is completely open interest, meaning all the contracts that are still out there that are not closed. So for example, if you buy a contract, let's say you buy 10 contracts, and you're holding on to those, that's going to add 10 to the OI, and it's going to stay there until you go close that out. So in this situation, if the whale has opened up all those contracts and has not closed them out, it's going to stand out there as open interest OI. All right. CSCO down 2.5% or so, 2.7%. Kind of just back and forth.
I think it could recover.
Yeah.
By tomorrow.
I think it definitely could head back up. Actually, I mean, either direction. So what I want to point out was just I drew some quick resistance and support lines before it reported. And you can see this blue line down here. I put an alert here just in case it does break down. This blue line down here, it bounced straight off of. Right up here as well, this blue line, previous resistance and support, it bounced straight off of. And then down here as well, this blue line as well, it's used it as support. You just see wicks hitting it and recovering right afterwards. And if you take a look at the lines where I drew, it's really just taking a look as to the previous highs and lows where you see the majority of buyers and sellers. And also something that helps is this volume profile on the right. This orange line is where the most number of buyers and sellers happen to stand. And that's actually always going to be a situation where you can consider it to be resistance and support. But yeah, so far, our analysis and our belief that we were going to see CSCO drop, I mean, we saw it. You guys saw it in real time. You guys saw our analysis right before it. You saw it happen in real time as earnings was reported. Now, here's the next part of it is it just going to respect this channel that it's in? So this is its channel that it's been in since, you know, the April tariffs were announced. And as of right now, it kind of took out some liquidity below and it came right back up into it. So question is it going to be able to recover and head back up, get back to that 70 level, or is tomorrow, are we going to probably see it come further down and retest that line to potentially go down further? Remember, after hours, especially with something like earnings, tends to be a situation where you see low volume. Not all the buyers and sellers are at the market. It's really just going to be big money kind of pushing things around. And options cannot be traded at this time. So once market opens, we'll see the true movement of this. But I will say a lot of earnings reports we've seen in the last 2 weeks or so, we see a big reaction to one direction, and then the next day we do see it kind of bounce back. You know, we either see profit taking or we see it kind of get snatched up. You know, especially with these larger moves to the downside. What was it? Big Bear AI was one of those. Big Bear had a huge drop and it recovered like almost $1 throughout the day right afterwards. But, you know, go back, look at some of our previous live streams. You know, I'd say Max and I, not, you know, big pat on our back just to say we've done a lot of these earnings reports and earnings calls and kind of just outlined it for you guys to see. You know, and I would say more often than not, our predictions are pretty much on the dot. Obviously, we're going to give you the bear case and the bull case, let you guys know what ends up happening if they beat earnings, you know, what's more likely to happen, especially with the outlook that they happen to have. And we've been doing this for, since earnings season starts, so it's about 3, almost 4 weeks of these on a pretty consistent basis. So, you know, it's up to you guys to go through our work, go through our videos. If you're in our Discord, we have these written up as well for you guys to take a look at. And again, have a conversation. Let us know what it is that you're looking at. Sometimes you guys have some more insights into certain industries. Maybe you work in that industry, or if you've had experience with that industry. You know, let us know. Our goal here is to have a conversation and to bring all the information, all the data out so that we can make a better and more educated type of analysis for you guys. All right. Anything else, you guys? I know we got 15 people. I love it. We're seeing more and more people join us on these calls, on these closing bell shows that we're having. Keep in mind, Wednesday, this is our scheduled one. If we have additional things that we want to watch, additional things that we want to make sure that we share with you, we will jump on here on live more often throughout the week, sometimes on the weekends to prepare ourselves for the upcoming week. But, you know, for those of you guys that are not in our Discord or don't have alerts set for that Discord, go ahead and hit that subscribe button. Hit the notification bell. That's the more important thing. The moment that we go live, you'll get a notification on your YouTube app or on your phone. That way you guys can jump in, or at least know to go and watch it after it's been recorded. That way, again, you guys get all the information as we're outputting it. Mind showing quickly how to set up the platform, what to look for when you first start using the app. Yes, of course. The first thing, it's not on mine because I already do have it installed. But if you're on a desktop like I am here, when you jump onto the Stacks page, there actually is an install app on the top right where you can click that and it'll install it for your computer. Okay. Obviously got to log in, and Stacks is under this. The other thing I will post right now for you in the chat as well is we do have, let me pull it up for you. We do have what's called a Beehive. It's basically a landing page and a newsletter we send out. But you can go ahead and check out this page, which has all of our introductory videos, how to install the app on your phone, how to set up your push notifications, things like that, and additional videos in terms of, we've got an interview with our CEO, interview with a couple of members that are a part of our platform and how they use it to look for plays and how they use it to analyze their positions. FSLR looks flat on the chart, curving down, looks bearish, but looking at stacks, the new flow looks good. Let me see what I can share with you here. FSLR. First Solar. Now we got a lot of flow coming in today, and it's all bullish right now. Since yesterday, actually. We got big money spending 10 mil, 11 mil just today. Keep in mind though, these ones are aiming for 2027. So that's a very long-term play. These are very pricey contracts, over $2,000 each. The short-term play here is the September 19th. So they're buying just a month out. And that's what, 500K right there. 500K on that position. Hold on one sec. The dog's getting into the trash. Alright. Let's see. September 19th. 220 calls. Yeah, 18% move in the matter of a month. I think they might know something. Let's take a quick look over at the chart.
I mean, when FSLR moves, it moves. Like, those contracts typically pay out pretty good. But you have to, they're not like, the one thing I've noticed about them, because I've tracked a couple FSLR callouts that we've gotten, you need to take profit when you see it because they move very, like they lose value very quickly on the downside. Because when it sells off hard and heavy. So there's not a lot of room for error in a sense.
I mean, it is in this upward channel. Will it break 200? That's the question.
Maybe. Well, you have to think about it like this. The worst case scenario for that industry has already happened, which was the clawbacks for solar tax credits. So they've already reacted to that news. So that could be the bottom, and it could be bouncing off like the whale's bottom target at this point.
Yeah, if you kind of peek over at where the volume is, this
big
run up and sell off.
They're the government side of solar, basically.
Okay.
So they deal with all the like government contracts and stuff like that. So they're not really dependent on consumer. They're dependent on commercial and government.
I've got a decent margin. Their net margin's 30%. Last quarter, 31%. I will say I like that 2027 play. PE ratio out of 15, which is decently low for a company like that. If I pull out all the way to the daily, the chart pattern has a bit of a risk to the downside. I'll say that. But it does look like it's pretty much broken out of that. You know, is that the breakout and the retest for it to head up further? And at least what Stacks has to say, Stacks thinks it's got higher to go. In 220. Somebody might know something. Somebody definitely might know something. Let me really quickly too. I'm gonna pull up, see if there's any insider trades that came in. They've been selling, but that was last month. Politician tracker, nothing on that side either. But yeah, I would say the big money definitely raises an eyebrow. What I would do here is definitely over the course of the next week, see if any additional prints come in on this. This, yeah, 2027 over 260. That's a 40% move from where we're at right now. So definitely interesting to see. Okay. Is there a time when you say like CSCO today, or Cisco, right? The big whales. Were you meaning to say Cisco CSCO? The big whales entered out 135. Now we're chasing it now at 1.8, where IV is like 150. Yeah. I would definitely. So you got to make sure that you don't chase once if the moves already happen. If the big moves already happen, don't chase. If IV is extremely high, two things to consider on IV. If they're still buying with IV so high, there could still be a move, but you have to understand you're taking that risk, obviously. So if I see IV at 100% or more, I understand that, again, IV means the direction that it could move. 100% up or 100% down is going to be normal. Be very careful with that. But if I still see them continuing to buy with IV that high, so one of the ones I would probably point out was this Ethereum move that we're seeing. 80%, right? 80%, that's not, it's not 100, but it's still pretty high. They still are actually getting into some of these positions, especially even with today. So that's just something to consider, is if they're willing to take the risk with IV that high, and they're not just being sellers of that position and selling that IV, it does, in my opinion, generally means that we could see a further move to come. Okay. Tomorrow, Walmart earnings. Canada, Walmart struggling since Trump tariffs it. Yeah, definitely. Is Walmart reporting it tomorrow? I didn't see it on my... On my thing it says it's reporting on August 21st, so next week. Next week. So I don't think it reports just yet. We have dividend coming up soon though, this Friday. I did get a question earlier today about dividends. So ex-dividend date. Okay, so there's this date called the ex-dividend date. That means you have to hold the stock through that day to get paid out your dividend. Okay, so what does end up happening is sometimes you do see a lot of people rotating into different stocks to get their dividends, that you do tend to see a little bit of a sell-off after the ex-dividend date. Now, if you're bullish on a particular stock, that is usually an opportunity for you to get that stock at a little bit of a cheaper valuation. So just something to consider. Cisco still just chopping around at about 2.5% down. Max, you were on point with that. Cisco was not going to be a big mover. and technically this 2.5% is a big move for something like Cisco.
It's only 0.5% more than its daily average. What do you mean?
Yeah.
It was expected 4% plus or minus either way. But again, Cisco, IBM. Go ask your parents what their favorite tech companies are. That's the old money we're talking about here. They're not big movers. They're always going to recover because guess what? Your parents aren't out there panic selling on their Robinhood account. They have to go call Gregory at Charles Schwab or whoever manages their money and then tell Michael to pull them out of a position. So it's not an easy process. And that is the money that you're competing against in these types of positions. Like, if that sell-off could have held 67, oh my God, the payouts would have been glorious. But is it going to realistically? No. It's going to get right back to the level it's been at. That's just the reality.
Yeah.
By the way, Drewski is on Bloomberg.
Eli Lilly already reported. Eli Lilly and TTD. Trade Desk dropped like crazy after their earnings report. That was one of the big moves that happened earlier in the week. So double check your sources there, because yeah, Trade Desk had this huge drop. I think was it Kathy Wood? I think just purchased a bunch of Trade Desk, but their P ratio is still pretty high. So all right. That's all I've got for you guys today. If you guys have anything else you want to go over before we log off here, drop it into the chat below. All of our information is in the description box. Max has his Substack. If you aren't signed up for Stacks or for our Discord, you can still get some of his earnings reports. He does have, part of it's free. If you do the subscription as well, you get a lot of information on a daily basis with Max. He's outputting stuff all the time. He also has his YouTube, so if you guys can, go subscribe to that, get some additional information there. Sometimes the stuff that's posted on our Investor Central Club Stacks YouTube is not going to be completely the same as what's over on his. So, get your bases covered and make sure that you go for both of those. The Beehive, I did leave the Beehive introductory page on there, and in our chat box. But if you want the Beehive, you can go ahead and check out our the link down below as well. All of our social media, you guys know what to do: Instagram, Twitter, Facebook, YouTube, LinkedIn, TikTok. We're all over the place. Make sure that you guys check that out. Well, our Cisco call out was pretty on point. I don't think it dropped nearly as much as we kind of, some people wanted it to, but I think tomorrow morning we'll see the truth and see what ends up happening. But it definitely did. It went straight to exactly where I drew my resistance lines. So that's always good to see. All right, with that being said, this is Eric and Max here with Investor Central Club with Stacks. Keep an eye out. We've got a lot of new updates coming for you guys very soon, but make sure you guys hit that notification bell. That way when we do go live again in the upcoming weeks, you guys can come and join us. Always happy to do this for you guys. Enjoy the rest of your day. Enjoy the rest of the trading week. We'll see you guys in the Discord and in our software. Have a great one, guys. Happy trading.